All right, so today we're going to not talk about the Bitcoin price, which is at 23,970 and still above the trend line. That's not important because today I'm going to show you what I think is the strongest buy indicator that I've seen for Bitcoin probably in a long time. And if you're not looking at this buy indicator, if you're not looking at this data, you may be making a big mistake. So today is a show that you definitely don't want to miss. It may change the way you see your crypto portfolio. So let's do this.
Ran shall be back very shortly.
I'm back. I was having microphone issues, but here I am. I'm back. And as I said to you guys, for those of you guys who missed my brilliant intro because it actually wasn't working, well, today is a day where we're not really going to talk about the Bitcoin price because Bitcoin is at 23,969. But that's not what we're going to be talking about today. Today I'm going to show you why I think it's one of the biggest buying opportunities that we've had in Bitcoin in a long time. I'm going to show you data because it's all about the data. And I'm going to show you something that I was so excited about that when I saw it last night. This is what I tweeted. So last night when I came across this data, I tweeted that and I said, tomorrow I'm going to show you something on the show. If it doesn't convince you to start accumulating Bitcoin now, then I really give up. So that is what we're going to be talking about. We're going to be talking about this tweet. It's going to be a big fun show. Sorry about that intro. Sorry about the music. James, you should cut it out. That music. We'll cut it out there. All right. For those of you who joined Sheldino's show, I got stopped out. Did you guys get stopped out on that bloody slant trade? There was a wick on BYBIT. Anyway, here we are. Here I am. I've made a decision that I'm not actually going to go long. And the reason why I'm not going to go long is because I actually think that there is a pullback that's due. So most of my positions here, as you can see, are short. I'm still short Rune. I'm still short Cardano. I'm short Shiba, but I realized why I only shorted 5,000 Shiba because it only lets you short 5,000 at a time. So $80 position, but I'm doing quite well, 33%. I'm long Near. Near's the only one that I'm long. And the reason why I'm long Near is because we're going into Neocon. And then I'm short Matic and I'm 70% up on my short on Matic. And if you look at the scoreboard right now, I am 201 position. So not good enough out of 1,951. Carl, how you doing, bro?
Hit the refresh button and we'll see you.
Okay, share your screen, Carl. Let's see how well Carl's doing here.
Okay, I just entered though. Is this my screen? Have I got the right one?
Yeah.
No.
How well you doing?
Okay, there I'm 907, but I just entered this trade now.
Okay, so what? It doesn't matter. So what? How much are you up? You up how much? Percentage. Just go to. You are ranked 970. Okay. I'm down. I'm ranked 201. Okay, and that's after.
But you have two positions open.
You can have as many accounts as you want. You can have as many accounts as you want. Anyway, enough about the competition. Carl's obviously coming last. I'm coming first around the BYBIT. Where are you coming? Remember, if you want to join, just go to the referral link in the description. Join up with a Crypto Banter referral link and then join the competition using the link. All right, let's talk about the markets. Actually, no, before that. Subscribe to our channel if you're not already subscribed. 95% of you are subscribed, 5% of you unsubscribed. It really helps us if you guys are subscribed. And it tells you when we're going live. And Sheldon did go live earlier today with a live trading competition, with a live trading show. Also, like this content. You guys are doing it. You guys are really helping us in terms of the shadow ban. And then comment in the bottom. Just tell us what you think of the show because that gets the shadow ban off our heads. I feel like the shadow ban's like a noose around my neck. It's not letting us go. Come on, smash up that like button. Let's do this. Today I'm going to show you something amazing. Are there still mic issues?
No, it sounds good.
Sounds good now, right? Yes, sounds good.
Sounds brilliant.
Does my man sound good? Just say yes. Oh no. Very nice. All right, let's talk about the markets and where we are. Ticker van Rensburg is ranked 19th.
Yeah, the community of good.
Community of, there is one guy here. Check here. He was up like 400%. Yeah. This DA someone K, he's up 400%.
You see, but now he's not taking another trade because he knows he doesn't.
Doesn't matter how you win, just win. Doesn't matter how you win, just win. All right, let's go. Let's have some fun. So Bitcoin is on the trend line and coming close to trend line. And I said to you guys yesterday that I think that this trend line over here is going to be tested very, very, very soon. And the reason for that is because I think that the NASDAQ is going to start coming down. This NASDAQ hasn't gone down as I said to you guys yesterday, in the last month, the NASDAQ is up 20%. Okay, that's 20% in the last month. And the issue is that this momentum is actually really starting to pick up speed. So what we can see here from Urian Timmer, who was here on the show on Friday, and if you missed that bant on Friday, what did you miss? But he says, what a run. 93% of the stocks in the S&P 500 are trading above their 20-day moving averages. S&P gained 17% since June 16, and it's retraced half of its decline since the January 4th high. So this market is really getting momentum, the stock market. This other guy, Ryan Detrick, says, Friday triggered a rare but quite bullish signal. 90% of the components of the S&P 500 are now above their 50-day moving average. So what you can see is that we're getting momentum. And as we're getting momentum, it shows that the bull market actually may be back. Remember, it's just like in crypto, when we cross over the 50-day moving average and we cross over the 200-day moving average, and then they cross over each other, and that's the golden cross. And then we're like truly, truly, truly in bull market territory. And now that's happening on the stock market. And that's not the only indicator. Because if you look at this indicator over here, it says when 90% of S&P stocks trade above their 50-day moving average, we see that on average, a year later, they go up 16.75%. So what does that mean? It means that when you cross over the 50-day moving average, then on average, a year later, the S&P goes up 15%, which means it's a very, very, very bullish sign. So what you're seeing on the stock market is you're seeing hugely bullish signs. You're seeing that the run actually may be back, that inflation is starting to come down, and the run may be back. We also saw yesterday, remember I showed you a chart yesterday which showed that people were short covering. So it could be a little bit of a short squeeze. Regardless of all of that, I'm looking at this and I'm saying, even though we may be back in some kind of upward trend, we are seeing more overbought because the RSIs are now reading over 70. So 30% of the S&P's RSIs have readings above 70, which means on a short-term time frame, we may be overheated. And if we are overheated on the short-term time frame, that's what I'm betting on in this competition, because that's why I think we may have some kind of pullback. And that's why, for me, most of my positions here are short. The only one that I'm keeping long here is Near Protocol, because this is a very short trading portfolio. Urian Timmer says exactly this. He says, bull market, bear market rally or new bull market. One thing is clear. There's a lot of momentum behind this rally, as measured by percentage of stocks with an RSI above 70. And you can see that he shows this chart here of all the stocks that are trading with RSIs of above 70. So this stock market rally is really starting to pick up momentum. And remember that between now and September, there's not much news that can get the market to slow down. In fact, what we're looking for in September is we're looking for the inflation numbers, which come out sometime in the middle of September. And after that, we're going to have the Fed meeting again and deciding what to do with interest rates. So what could bring this rally? What could slow down this rally? And remember that in a way, we actually want this rally to be slowed down. Why do we want this rally to be slowed down? Well, if the markets get overheated, it's going to give the Fed a license to increase rates much more aggressively, because they want to slow down the growth and they want to slow down inflation. That's what they want to do. And so what we want is we want this rally to do a slight pullback. And one of the things that may actually cause this pullback is the fact that quantitative tightening actually gets more aggressive in September. You'll remember that the Fed grew its balance sheet by putting more money in the economy. That was this part over here. We all remember this from COVID days. And you can see, if you look very, 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 very closely, in fact, let me just change this chart a little bit, if you can change this chart a little bit, and you can see that very, 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 very little, the Fed started to reduce its balance sheet. You see that from the top, it's reduced its balance sheet just a little. It means it's taken out money from the economy. And remember that initially, they were going to take out $45 billion a month. And then from the 1st of September, they were going to up that amount to $90 billion a month. So the 1st of September is the first month where the Fed is actually going to try and tighten their balance sheet, but by $90 billion as opposed to $45 billion. And maybe that will be one of the catalysts that will slow down this economy a little bit. I think the other bit of data that the Fed is going to look at is the Fed's going to look at the housing market. Because remember, we said that the housing market is almost like the final frontier. So first inflation starts to go down, and then the housing market takes much longer to slow down. And the reason why housing takes much longer to slow down is because, remember, first you put your house on the market, then you realize you're not getting an offer, then you realize you really need the money, so you start dropping the price, and it takes quite long for that cycle to play out. But what we are seeing is that the housing market is starting to come down a little bit. So let's look at the housing market. Buyer competition, lowest since 2019. New listings down 12% in July, most since June. 8% of listings had price drops over the last month. So people are starting to reduce the prices. Mortgage demand is the lowest in 20 years, and existing home sales are also very low. So what we can see now is that the housing market is also starting to cool down. And I mean, you can talk about housing as a bubble, and it probably is a bubble because of all the money that was put into the economy, and now no one's buying, and that's probably the last frontier that has to come down. When the housing market starts coming down, that's when we'll probably see the end of the real end of this tightening cycle. Remember that housing always takes much longer to come down, but remember that a lot of people are exposed to housing, and a lot of them have got mortgages against their house. And when the Fed increases interest rates, it pretty much means that they're taking more money out of people's pockets, because it means that you got less money and you got to pay the same mortgage. That's pretty much what it's about. So that's what we're looking at now. And as I said before, I'm looking for a short-term pullback in the NASDAQ. There are the minutes tomorrow. Simone Dame says correctly. There are the FOMC meeting minutes tomorrow. But because the meeting was so bullish last time, I don't see anything crazy happening in the minutes. Someone says your mic sucks again. I thought it.
They're trolling you.
Yeah, they're trolling. They're daydreaming. We're also looking at this 10-year government yield. Remember, this is the interest rate chart, and so far it's on that neckline. I mean, it's got to choose a decision. I think it's going to go down, but I mean, I guess let's wait and see. And then you got Ethereum 1,008. This is you're starting to get a slight pullback in this market. I think my shorts may start printing. Here we go. They're starting to print. I wish I'd taken a bigger short on Shiba. I really did. I should have. All right, let's talk about that. So I guess when we look at all this data, the one thing that we see about this data is this is all data which is like data about now, about things that are happening right now. And sometimes when we look at the data of things that are happening right now, we miss what's happening in the big picture. And that can be very, 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 very dangerous in investing. So when you're looking at real short-term data, what you do is you end up missing the big picture. And the big picture is actually where it's happening. Because remember, when we got into this industry, we didn't get into it to day trade. We got into this industry because we wanted to invest in an industry that was possibly the most exciting business industry in the world. It was a emerging exponential technology that had the potential to really change everyone's lives for the better, to bank the unbanked, to give us money that was not controlled by governments, to give us true decentralization. And so the reason why we actually got into this game was not to day trade, even though day trading is a lot of fun. And I must say, I'm not a day trader, and I am having a lot of fun. I'm having a lot of fun in this trading competition. That's not the reason why I got into this industry. The reason why I got into this industry was because in my previous life, I ran a business which was a linear business. And a linear business is probably the same kind of business that most people are working in. A linear business is when you have to work harder to make more money. So my previous business was a marketing company, and it meant it was a very big marketing company. It was the biggest marketing company in Africa, and I sold it as the biggest marketing company in Africa. But the reason why I left is because I had to work harder to make more money, acquire more clients, get more offices, hire more staff. And at the same time, I saw something incredible happening. I saw an exponential world unfolding in front of me. I saw apps like Uber and apps like Airbnb. And those apps essentially grew regardless of whether people worked hard or not. So if you think about like Uber, for example, if Uber closed its offices, the network would still continue to grow. And so the reason why I got into crypto was I got into crypto because of network effects. And I believe that a lot of you guys also got into crypto for exactly the same reasons. You came here for the price action. You then learned about the technology. And when you did your research, you really learned about this amazing thing called network effects. So for those of you who are new, let's quickly talk about what network effects are. And this epiphany came to me yesterday when we were teaching our school module. Remember, we built a crypto school to help or to try and get 1 million people into crypto and actually pay them to learn about crypto. So yesterday when we were teaching the crypto guys, and it was so exciting. Actually, I actually want to show you this. It's so cool. We literally sat on the, hold on a second, I want to show this to you. So we literally sat on a Zoom type call with 500 people, and we were teaching them about crypto, and they were all newbies into crypto. And when we were teaching them about crypto, I saw this piece of data, and I thought I have to share this data with you. So let's talk about this. The reason why we're here is we're here for this beautiful thing called network effects. Now, for those of you who don't know what network effects are the most powerful business effect in the world. So let me explain to you how they work. If I were to ask you today what the most valuable companies in the world are, you'd say to me it's companies like Facebook, Amazon, Google, Uber, maybe even WhatsApp, right? Those are all the most valuable companies in the world today. The next question is, well, what makes all those companies so valuable? What's the one thing that all those companies have in common that makes them so valuable? And of course, you know that the answer is that they're all networks. WhatsApp is a telephone network. Google is a data network. Bitcoin is a money network. Ethereum is a smart computer network, a supercomputer network. But what is this thing called a network? Well, network effects are actually governed by two laws. The first law is called Metcalfe's law. And what Metcalfe's law says is that a network increases in value exponentially every time a new user joins a network, right? So let me show you a quick video. It's actually a very cool video. It's from our school. It really explains it very, very simply. Let me quickly find you this video. Here it is. Watch it. It'll take 2 minutes, and then we can talk about networks and why the big opportunity and why there's such a big opportunity. Okay, is this going to work? Let's see. Okay, let's try that again. Okay, give it 3, 2, 1.
Network effects are actually defined by two laws.
Okay, what did I do? I just made it big.
The first law is called Metcalfe's law. And Metcalfe's law says that the value of a network increases exponentially with each new user that's added to the network. So let's think about our WhatsApp example. In the beginning, when there were just two of us, the maximum number of calls in the network was, well, I could call you and you could call me. When we brought Sheldon into the mix, well, then the maximum number increased to 6. And if we added 10 users to the network, the maximum number of calls would increase to 90. And so we can see that by adding a user to the network doesn't grow linearly. The network starts to grow exponentially. That's the power of Metcalfe's law. With every new user that joins the network, the value of the network increases exponentially. The other law that governs network effects is called BYBIT's law. And this law says something quite simple. It says, in the absence of any regulation, users will flock to the busiest networks. Let's use the WhatsApp example again. Say you've landed in a foreign country and you need to pick a service provider for your messenger app. You can choose WhatsApp, which everyone else is using, or you can choose one of the other competitors, which only a few people are using. Which one are you going to choose? You're going to choose WhatsApp, because that way you know you can speak to everyone. And so you see that when you do that, you fall into BYBIT's law. In the absence of any regulation, you'll join the busiest network. And when you do, you'll perpetuate Metcalfe's law and increase the value of that network exponentially. It works the same with all other networks. If you're thinking about using a transport service, well, you'll use Uber because you know that the wait time is going to be the shortest. And as the wait time becomes the shortest, that attracts more users. And more users attract more drivers. And so every time you do that, you join the network and you increase the value of the network.
All right, so that's the bottom line around networks. And when we're investing in Bitcoin, we are investing in networks. And the thing about a network is it's the most powerful business effect in the world. once something has achieved network effects, it continues to grow exponentially. Okay, exponentially, right? Unless one of three things happens. In fact, there's only three ways that you can stop a network effect. The first thing is if governments get involved and ban the network. So say, for example, governments banned Facebook or Uber or WhatsApp or Google, then the network effect stops. The second thing is if it breaks down, if a network breaks down. And the third thing is if a 10 times better network gets launched. So the reason why we're here is because we're investing in networks. And when something has a network effect, it absolutely can't be stopped. So we know that. That's the basics. That's why we're here. Now I want to show you some data. And I want to show you why I think that now, if we zoom out and we forget about the day-to-day stuff, it's probably one of the best opportunities for us to be buying a crypto. And I want to start off by showing you guys this chart over here. This chart over here is the Bitcoin chart, and it's the price chart. But this orange line here is the number of Bitcoin addresses minted. What you'll notice is that for the first time, we hit 1 billion addresses on the Bitcoin network. Okay, now, this doesn't mean that there's 1 billion users on the Bitcoin network because everyone has more than one address. In fact, I think I've got 30 addresses. But it does show that there are over 1 billion addresses on the network. The other thing that you'll notice is the growth of the addresses is actually exponential. So that's really an exponential line. But that's not what I wanted to show you. In fact, there are some other stats here. So one is we see that $62 trillion worth of Bitcoin was settled on the network last year, which was 3 times the effect of the size of the US GDP. All right, but that's also not what I wanted to show you. We also look at this chart, which says that by 2024, crypto will hit 1 billion users, and that if it carries on the same trajectory that we are today. So not 1 billion addresses, but 1 billion users. But once again, that's not what I wanted to show you. What I wanted to show you was the data that shows me that we're at a point with Bitcoin now where you've got a very unique buying opportunity. Let me show it to you. So I took the chart of Bitcoin's non-zero addresses. So this is addresses that actually have money in them. And what you can see is that the chart is pretty much exponential, right? So you can see over here, the chart grows exponentially. It dips a little bit over here in 2017 and 2018 when people lost their money. This is the 2017, 2018 hype. This is when everyone invested in Bitcoin to get rich. And then it started to come down. And then after that, the network continued to grow exponentially. The number of users continued to grow exponentially. And if you had to insert a line here like this and ignore that little kink in the line which goes above the trend line, you kind of see that the adoption of Bitcoin has become absolutely exponential, right? So we all agree that right now what's happening with Bitcoin is that there is exponential adoption. And so it meets Metcalfe's law and Barabasi's law. But that's not the important thing. I then went to look at all addresses worth less than 0.1 Bitcoin. So I'm talking about small players in the industry, people with less than $2,000, $2,500 worth of Bitcoin. And what I realized was that something very interesting happened here. You can see that, first of all, the adoption of those users is growing exponentially in keeping with our theory. We can see that in 2018, we grew a little bit too quickly. We broke off the exponential trend line because people thought they were going to get rich quick. That's why they came. They thought they were going to get rich quick. It didn't happen. They got flashed out with a little correction. But we carried on growing. And we carried on growing exponentially. But now something very interesting has happened. Even though we're growing exponentially, we're seeing something that we haven't seen before with Bitcoin, which kind of shows that Bitcoin right now is going through something very, very, very unique. You'll notice the first time that the number of addresses of Bitcoin grew super exponentially was in 2017 and 2018 when people thought they were going to get rich quick. Those guys got flashed out pretty quickly over here, as you can see. But this time, you can see that again, Bitcoin is starting to go above the exponential line or grow much faster than previously. But only this time it's doing it when the line is going down. So you can see that this time the price is going down, but the users are growing exponentially. So what we're seeing here is we're seeing that Bitcoin has network effects, and therefore Bitcoin can probably never, ever, ever be stopped unless there's government intervention, failure of technology, which will never, ever happen, or shouldn't happen. It's been battle tested, or a 10 times better technology. And there's no 10 times better technology anywhere on the horizon. we're also seeing that the address growth is exponential, even though people aren't buying it like they bought in 2017 and 2018 to get rich quick, which shows that Bitcoin is actually starting to be adopted for what it is, which is the safe haven against printing of inflation. It's a better store of value, and it's starting to be adopted for what it is, regardless of the price. So it's not only about speculation, but it's actually that regardless of the price. So we're seeing an exponential growth in addresses, even though price is going down. We're seeing an exponential growth of small players into the system. Great. So we now have confirmed our theory, or we've confirmed that Bitcoin has real network effects. Now I want to show you something else. It's a chart that we've spoken about for a long time. It's the weekly chart. In fact, let me try and get us a better chart. Let's get us a BTC USDT chart from Coinbase. That's, I think, a good chart to look at. Actually, that's not going to work. Let's try and find a better chart. BTC USD. Bitstamp. Okay, we'll use this chart. And I'm going to take you back to the weekly chart. And let me... Okay, so, and I'm going to add the 200-week moving average. And what you can see is, as I said to you guys many times before, you've got Bitcoin, which has always been above the 200-week moving average. The 200-week moving average is one of the most important charts because it shows that Bitcoin is remaining in an upward trend. So you look at the price and you say, okay, look at this price. You got Bitcoin remaining above the trend, and every time it goes near the trend, it goes up, and it goes up exponentially. We spoke about this yesterday. Like here, when it touched the line, it then did a 7,000% return. And here, when it touched the line again, it once again did a 1,600, in fact, let's just go straight to the top, 1,705% return. So what we know is that every time it goes near the trend line, we're getting a huge explosion. And now if you look very closely, you'll see that Bitcoin is just over the trend line, and it's confirmed that we're above and within this trend. So we're inside the trend, and Bitcoin is about now 2% above the trend line. Now, I'm not sure when you're going to be, when you're ever going to get an opportunity again to take a technology which is growing exponentially like this, which is being adopted exponentially like this. So when I say growing, it's not growing like it grew over here because people wanted to make huge money. It is actually being adopted despite the price going down, whilst at the same time, the price is within, let me just get rid of all of these, whilst the price is just above the trend line. I don't know if you're ever going to see another opportunity like that in your lives. And that's why, for me, I think this is a generational buying opportunity. I think we've got a technology which is being adopted exponentially, not speculated on exponentially, while at the same time, we're for the third time in the history of Bitcoin, we are on the trend line or close to the trend line. And we know that every time that happens, the price explodes. And I'll show you that with ETH, it's a very different story. So ETH is behind Bitcoin. ETH is still very much a speculative asset. And I'll show you why. Let's take the ETH price. And what you can see here is that as soon as the price of ETH started going down, so did the number of addresses with less than 0.1 ETH. They started to go down, right? That is exactly what happened to Bitcoin in 2017. Let me show you again. That's what happened here to Bitcoin in 2017. Over here, price went up, addresses went up, price went down, addresses went down. ETH, price went up, addresses went up, price went down, addresses went down. And what we can see is that Bitcoin has now matured, and Bitcoin now really has unbelievable network effects. It's growing despite the price. It's growing because it's being adopted despite the price. Whilst at the same time, as I said to you, we're just on the trend line and usually on the 200-week moving average, and that usually means that we're going to have a huge spike up, right? And Ethereum is doing what Bitcoin did last cycle. It's starting to come slightly down, and when the price goes up, probably the number of addresses will go up. And so what we can deduce here is two things. One is that this is probably a generational buying opportunity for Bitcoin. If we just zoom out and we forget about what the Fed's going to do next week and next month, and we say, okay, what's going to happen in the next 2, 3, 4 years? We're probably buying network effects very, 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 very early and very, very, very close to the 200-week moving average, which is an anomaly. The second thing we can deduce here is that ETH is following in Bitcoin's footsteps. And so we can expect ETH to have a big cycle, but slightly less than return than it had this cycle. And as I said to you in a previous show, we look at Solana, and Solana is doing in now what ETH did in the first cycle. And so, as I said, I think that this is a huge buy signal. If we stop looking at the noise and we stop looking at what the Fed's going to do next week, next month, or in the next 2-3 months, this is probably one of the most unbelievable buying opportunities that you'll ever see. When I saw that yesterday, I thought I have to show that to you. I think we're beyond Bitcoin's young years. We're going into the more mature years for Bitcoin, and now's when we're going to start getting the real adoption. And on a risk-reward basis, probably Bitcoin is right now your best investment. Probably ETH will give you a better return, but you're also taking a higher risk, because what the market's telling you is that there is some risk that the ETH merge will be unsuccessful. And so on a risk-return basis, today, Bitcoin is probably the best asset to be buying. If you're willing to take higher risk, well, then you can go into altcoins, you can go into Ethereum, and you can go into a whole lot of others. That's what I wanted to show you. We're still early. That is amazing. All right, let's see. What else is there? Is there anything else today that I wanted to show you? This is actually very interesting. This is actually very, very, very interesting. So if ETH is truly decentralized, permissionless, and censorship resistant, it means that all validators must validate all blocks no matter what is in the blocks. This includes tornado cash blocks and anything that the nation state or OFAC may deem illegal. The problem is that because centralized entities are becoming validators, they could say that we don't want to approve or validate a block that has a tornado cash transaction in it. Right, so we've already seen what happened with Tornado Cash. All of a sudden, because of the sanctions, most companies have stopped Tornado Cash. Their website was taken down and whatever else, right? And now with proof of stake, because there are a whole lot of validators, the validators can refuse to validate an Ethereum transaction if there's a Tornado Cash transaction in it, because they're scared of sanctions. And that kind of defeats the whole purpose of being decentralized. So I was reading this, and this is actually quite a cool view of this. And it says, in proof of work, the miners don't really look at what's in the block. They're just moving value from one point to another point, and they're mining it. So the question is, on proof of stake, can you really, 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 really be decentralized? And that's a question that we should probably be asking. All right, what else is there today? Kusama made an announcement. Sorry, Kilt made an announcement that they are moving from Kusama to Polkadot, which I think is a huge announcement. Initially I was a big Kusama fan, but then I kind of thought to myself, hold on a second, what do I need Kusama for if you've got DOT? And they're exactly the same thing. The one is a testnet or canary chain or whatever you want to call it. So Kilt is moving to DOT because of its proven efficiency, 50 partnerships, etc. I think it's a big announcement. I think what's going to happen is, I think over time, there's probably not going to be much of a reason for Kusama to exist. So I don't know. That's just a theory that I read. Probably worth sharing with you guys. What else? Okay. So remember our CoinStats. CoinStats is the portfolio manager, which allows you to keep your entire portfolio basically in one place, and you can trade from here. This is where we do our DCA. And I said to you guys, if we can get 200 people to sign up, then they'll give away a Bitcoin to our community. So there's 80 of us currently signed up. The 80 of us currently signed up. It means if we get to another 120 people, one of you will win a Bitcoin. One of you will win a Bitcoin. So that's quite big. So sign up today. It's open till the end of August. And when that happens, well, one of you will win a Bitcoin, which I think is very, very cool. A 1 in 200 chance of winning a Bitcoin. Massive, massive, massive. What else? I guess that's it. Let's quickly look at my portfolio and where I am. Oh, look at this. Look. I'm number 179. Carl, what are you?
I'm still 890.
Yeah. I did show you guys. I did show you guys this. Shane Carl, he's still 890. I did show you guys the GALA stuff. I'm super excited about what GALA are doing, and they have sponsored the show. But I really, in terms of, I said to you yesterday, I'm so bullish on NFTs and metaverse. And what GALA are doing is, they spread themselves around music and around gaming, and now they've opened up their film program, and specifically, you can become a film node. You can become a film node and earn money every time that data or films are streamed. Watch this. I don't know. I'm super excited about it. I'm just super excited in general about what GALA is doing. All right, we've got 1 or 2 more minutes. Are there any questions? Let's do some Q&A. If anybody wants to see anything. How's my DI? My DYDX is not doing very well, but I'm holding it because I'm holding it for the long term. I remember I'm holding it for the long term. Irina's back. Irina, how are you? We haven't seen you for so long. There we go. We see Irina's back. What I think of Stargate, I think Stargate's very good. You know, I'm an investor in it, full disclosure. I think people just haven't clicked on it and haven't started using the technology yet, but Stargate is very, very good. Hello, Irina. Haven't seen you for a while. What else is there? How's my slant trade? I'm out. I got liquidated, I think, with the rest of you guys. I'm out.
Liquidated or stopped out?
Stopped. I got stopped. I didn't get liquidated. I got stopped. Do you think 17K was the low? Yes, I do. I think 17K was the low. Kujira is on fire. I've said that a million times. I love the Kujira team. In fact, who would have thought that a project that was very close to zero could recover like that? Where do you get the energy to be here every day? I love what I do. There's nothing better for me. There really is nothing better for me to do. Current thoughts of EGLD. I like the technology, but I don't think they got a big enough ecosystem building on EGLD. So I've often said I like the team, I like Benjamin and all those guys, but I just think they need a bigger ecosystem building it. And I think they're trying to control too much of it. Am I coming to Lisbon? Yes, Banter Girl, I am coming to Lisbon. I will be there for NearCon on the 9th of September, and then I'll be there again for Solana Breakpoint in November. What else? All right, let's leave it for that. Let's leave it at that. I will see you guys again tomorrow. Until then, have fun and trade well, my friends.
I mean, the person doing looking at this trades out.